Welcome back. As promised, let's focus on Indian Metals and Ferro Alloys. That's IMFA. The company had reported margins that were much better, actually, on a sequential basis. On a year-on-year basis, they were more or less flattish. To understand what's the way ahead and how are things shaping up, well, we have Mr. Subhrakant Panda, who is the managing director of the company. Hi, Mr. Panda. Good morning, and thanks a lot for joining in. Well, let's knock out a couple of factors out of the way. The volume's a little bit lower on a year-on-year basis. Even pricing was a little bit subdued. But yet your margins came in at more than 24%. How come? And also, given that now volume should improve from here on and the benefit of higher prices will flow in, do you believe that you can hold on to margins or better it from here?
Good morning, Nigel. Always a pleasure to be on your show. So in as much as the Q1 FY25 numbers are concerned, yes, we have certainly reported better margins than we had anticipated and talked about the last time I was on air with you. But actually, in terms of prices, we have done better than the average for the previous year. If you look at it, even on a whether quarter-on-quarter basis or sequential basis, we have done better. What has also helped is the fact that input costs are have come in quite a bit lower, in the sense that both thermal coal prices have come down, as well as, more importantly, metallurgical coke prices have come down. And that is what has helped us report better numbers, even though, as you correctly said, the volume for the year was, for the quarter was a little subdued on account of maintenance activities. Now, going ahead, first of all, in our press release, what we had talked about was anticipating better prices in H2 of the current financial year. But in as much as ongoing Q2 is concerned, that is traditionally a weak quarter on account of summer vacations in Europe and monsoons in the Far East and all of that. So we are seeing a little cooling off of prices from Q1 levels, currently about 106,000 per ton or something of that sort. But the good news is that costs are coming down further. So metallurgical coke prices definitely starting from next month will come down further in terms of what we are currently using and the new inventory which is there. So all of that coupled with volumes coming back to normal should see us, if not maintain the numbers that we've reported in this quarter, perhaps even improve upon it a little bit.
So you had earlier pointed out that you could do, a rough run rate of 150 crores per quarter in terms of an EBITDA. With these developments, where do you see that number heading? And if you could give us an updated guidance on the volume, this quarter was subdued. You expect some pickup in the coming few quarters?
So volume for this quarter was roughly about 61,000 tons, as I said, on account of maintenance activities. But going ahead, we should be back to the standard 66,000 tons. So that is in terms of volume. Now, in terms of prices, what you are asking, what we expect, or EBITDA, what we expect going ahead. Look, two contradictory thoughts. As you know by now, I normally don't look too much ahead into the future, given the fact that this is an industry which is cyclical. But there is a quiet confidence that H2 will be good, on account of the fact that stainless steel production has been good, whether in China, whether in India, and generally, with demand being okay and production picking up, that should translate to good times, I would say. Don't forget one other factor, which is that non-integrated producers are also sort of handicapped a little bit by high or elevated chrome ore prices. That is something which doesn't affect us, given that we have captive mines. And therefore, all these factors taken together is something that is giving me quite confidence, barring, of course, unforeseen circumstances.
Okay, all right, Mr. Panda. I was just looking at production, both from Glencore as well as Mirafis. Both of them were down by mid-teens for the first half of the year. So it clearly shows that power shortage in South Africa is clearly playing a role. Your reading?
So, funnily, actually, in as much as power situation in South Africa is concerned, that is something that has been a bit more stable than usual in the last couple of months or so. But certainly it is getting more and more challenging to produce ferrochrome in South Africa, is what my general take is. You have heard a large producer indicate its intent to get out of the smelting business and only hold on to their chrome ore mining bit. So clearly, I mean, there are things happening in South Africa which are difficult to fathom sitting this far away. But there are infrastructure issues. There are many other issues which are at play, seeing that volume correction leads me to believe that you will have more and more ferrochrome production shifting out of South Africa and moving to China, which in a way augurs well for us, because keep in mind, China is a high-cost producer on account of being being entirely dependent upon imported ore. So clearly, they provide a floor to prices, and for integrated producers like ourselves, that translates into a pretty healthy EBITDA margin.
All right, so that directionally should be a positive for you, though difficult to sit here and fathom about what's taking place in South Africa. Let's talk about here and now itself. I just wanted to understand from an industry standpoint, the Supreme Court, ruling that recently came in, where it did say the power of state legislators to tax mineral-bearing lands and quarries cannot be limited by the parliament. Wanted your thoughts on this. If this were to happen, what happens next? And if not for you, for the industry, what are the kind of numbers that we're looking at?
So Mangalam, this is clearly a significant judgment that a 9-judge constitutional bench of the Supreme Court has delivered, and it has significant import going ahead. But the dust has yet to settle, in the sense, as you know, a couple of days ago there was a follow-up hearing to decide whether it would be applicable retrospectively or prospectively. So I think one has to wait and see how that pans out. So at this point in time, it's very difficult for me to comment on it. And we certainly don't have a hang of what the impact will be. So first and foremost, one needs to see whether it is going to be applicable retrospectively or prospectively, and then take it on from there.
If it is retrospective, do you have a number in mind?
No, I don't have a number in mind, but I would want to make one other point. When we talk about manufacturing competitiveness in India, a couple of things come into play. One is, of course, certainty of policies, and the second thing is the fact that if you look at minerals, they are already subject to a lot of levies. So net, one would expect that the sum total of all of this adds up to a number which is digestible. But like I said, no further comment beyond saying that let us first wait and watch whether it is retrospective or prospective, and what actions follow thereafter.
All right, Mr. Panda, we let you go at that, but we look forward to having a chat with you maybe in the next coming few weeks, because the street believes that 220 crores of compensation is going to be coming to the company. So maybe once you announce plans what to do with that, we'll get you back on the channel and discuss more. Thanks a lot for joining in and giving us a fair outlook. Well, for the time being, we slip into a short break. You come back, we'll continue to focus on markets and stock specific action.